Is the giant Dallas housing market showing signs of waking up from its 2-year-long nap? Well, with the 2024 presidential election finally behind us, in this video, I want to dive into some of the signs that this big boy could be about to roll back out of bed and get back to work. And we're going to get after it right now. What's up, everyone? Welcome back to my channel where we help people just like you answer the question, should I move to Dallas, Texas? My name is Kristen Carpentier, and I'm a local realtor here in the Dallas-Fort Worth Metroplex, but I was not born here in Texas. And just like a lot of you may be considering making a move here, our family also relocated here about 13 years ago now. So if you too are thinking about making that move here to Dallas, Fort Worth, or any of the surrounding suburbs, be sure to reach out to that number that I have down below. I am never hard to track down. And in fact, if you do call me, it's most likely going to be my happy, shiny voice that you are going to hear on the other side of the line, not like some of our other fellow YouTubers that are out there in our local market. So today I want to give you an update and dive into how the Dallas housing market is doing, and more specifically, all the signs which seem to be pointing to the direction it may go over the next year or so. All right. So, what has happened since the last update that we did when the spring market had just ended? Well, the most important thing in our house was that the Dodgers won the World Series. My baseball obsessed husband can finally rest easy that his beloved Dodgers didn't let him down yet again. Also, the wars have escalated in the Middle East. Russia and Ukraine continue to be at war, and the Fed has cut interest rates twice now. But the interest rates for mortgages are actually on the rise. Now, how can that be? Well, if you do stick around, I will show you why. Oh, yeah. And with that election finally over, we can quit being bombarded with all of those political ads that have been out there. So, how is all of this affecting the Dallas housing market? Well, even with the Dodgers winning and making my husband extremely happy, that didn't do much for the Dallas housing market here locally. And the wars in the Middle East and other geopolitical issues have caused volatile oil prices. The price of gold is near all-time highs, and Bitcoin hit an all-time high as well. All of these points have led to a lot of fear in the markets, which is what leads me into talking about the interest rates. So just this past week, the Fed made another quarter-point cut to the Fed funds rate. That takes us down 3/4 of a point from the 5.3%, which was a 4-decade high. And now it's down to 4.6%. This was done because annual inflation has fallen from its peak in mid-2022 of 9.1% to a 3.5-year low of 2.4% in the month of September that just passed. Now, policymakers are estimating that we'll see a further quarter-point rate cut this year and 4 more next year. But Jerome Powell, the chair of the Federal Reserve, declined to confirm that, though, in their last meeting that they just had. So you may be wondering, why have mortgage rates not followed the same path? Because it would actually make sense, right? Well, not so fast. The 30-year mortgage rates are highly correlated to the 10-year Treasury yield. Now, a few things about the 10-year Treasury that may help you understand why mortgage rates are not following the same path as the Fed funds rate. First, when prices go up in this particular instrument, the yield will go down. So what causes the prices to go up? Well, that would be supply and demand. Simple economics, right? So the 10-year bond tends to be an investor confidence indicator. So when an investor confidence is high, meaning that investors are confident in the stock market, the price of the bonds will drop and the yields will rise. This is because investors are confident that they can get a higher return on investments elsewhere. Thus, the demand is going to be low. Now, the opposite is true when investor confidence is low. This is meaning that they are flocking to safety and want safer investments where there is uncertainty in the markets. So how does that explain why mortgage rates keep rising, but the Fed keeps cutting the rates? So take a look at the stock market since the Fed started cutting rates. The Fed cut rates the first time in September. So what happened in the market since September? As you can see from the chart, it is making all-time highs. So the simple reason that rates have not come down and do continue to rise is that the stock market is offering very good returns, definitely more than 4.42% per year. So investors are not buying the bonds, which is making the price of bonds to drop, and the yield is rising, which, as we have shown, correlates to 30-year mortgage rates. Okay, so finally, the big elephant in the room, The election. All right, one reason the housing market has been pretty flat, I feel, is that many were not sure what the future held in terms of direction to policy and our economy. On one hand, you had one candidate that wanted to tax unrealized gains and have more government intervention in our housing market. Then on the other side of the coin, there was a deregulation and free market solutions with minimal market interference from our government, and to boost home ownership through jobs and economic growth. As you can see, these are two polar opposite approaches for our economy. Well, the day that Trump was elected the next president, the stock market went crazy. It was up almost 1,400 points in one day. So, Trump's plans related to policy and the economy will be how we move forward. There is no more uncertainty of which direction we're going to be headed. And if there is one thing that Wall Street hates more than anything, it is uncertainty in the market. So that is why the market has gone nuts over the past week. So now that we kind of understand those big ticket items and probably ruffled a few feathers out there, let's dive into actual Dallas housing market data and see what it is telling us. But before we do that, I just wanted to let you know that we have a ton of resources on our website about the Dallas housing market at whymovetodallas.com. So be sure to check that out. All of these charts and several economic indicators that I talk about that affect the housing market are free on our website for you if you want to go back and take a look after this video. But of course, make sure to watch this video all the way to the end because there's so much valuable information in it. All right, now in this table that shows the Dallas housing market performance for the past decade, there are a few important things that you should take note of. So I like to understand what is normal to give myself a baseline to work from. And in the table, you see the DFW median sales prices by year and the key months in each year. One observation about the Dallas housing market is that it is very cyclical and you can almost set your clock to it, so to speak. Now, January to June is what we're going to call our spring market, and this is when most of the housing market gains will occur annually if the market is acting normally. As you can see, over the past decade, homes have risen, often in double digits, within this same time period each year. Now, on that last video that I was talking about, I did note how 2024 was the lowest amount of home price appreciation in over a decade during our spring market. And to put that in the back of your brain and keep an eye on things as we do head into the fall market that we're talking about. So fast forward to October, which from June to October tends to be the worst performing period during a calendar year, which is why I call it the fall, because that is what prices do, not just in the season. Now, prices might not be drastically reduced, but you will see a lot more price improvements during this time period in a real estate market. So by looking at 2024 to see how it compares to other years, this was the third smallest decline in over a decade. So that is kind of telling me that the wheels didn't actually fall off of our market. Everyone has just been in a holding pattern, waiting for clarity on the direction of our country. Now, this was my first indication that the sleeping giant was possibly about to wake up. Now, the next observation here is that you can see that from October to December, we do tend to have home prices start to rise before they will again drop in January due to having gone through the holiday season. So if we have a good final quarter in the housing market for the year, things are teed up for that spring market here in Dallas. Now, of course, we'll have to see what the future holds when Trump is sworn into office and those Republicans hold the Senate and possibly the House as well. Trump will likely move pretty fast on his campaign promises to try and get this economy moving as quickly as possible. Just one other takeaway, though, from the table that you may want to take note of. January and October do tend to be the best months of the year to buy homes here in DFW. And often when home prices drop in October, they tend to settle around the March and April prices of the current year. Though it's not 100%, you can see that pattern in the numbers. But also you can see on average that prices drop almost 5% from the peak in June. So just in case you're planning to make your move to DFW and you're a little bit more flexible on your timing, just kind of some numbers and timelines to take note of if that might be important to you. Now, of course, this is for all of DFW. When you dive into particular suburbs and neighborhoods, things could be completely different. So that's why you reach out to me. We can put together a plan and find that perfect place for you and your family if you are considering making a move here to the DFW area. Speaking of median sales prices, there is an interesting pattern on the chart. Those of you who use charts to trade stock or other investments may recognize this pattern. In my house, my husband loves to talk about this all the time, hence why I want to show all of you smart people out there as well. So, although the housing market is not very liquid like the stock market, this wedge pattern tends to indicate that we are heading for some sort of a breakout. It's kind of like winding up that jack in the box for us old people. And at some point, that stupid clown is going to pop out of the top and scare the crap out of all of you. So, pressure is building. Just thought that was kind of interesting to take note of. All right, now looking at a more smoothed out median sales price for the Dallas housing market, you can see that things have been flat for the past 2 to 3 years. This chart is a 12-month rolling average, so this is each year's ending in October, and it literally has only changed $779, not even $1,000. So now for all of those, the sky is falling people out there. I did talk about this years ago when everyone was saying that the market will crash. And from what I was seeing, that just did not seem to jive with the facts that were being shown out there. So fast forward, and we still have not declined. So be careful about watching those talking heads, all those YouTubers that are out there kind of fear mongering just to hopefully get those clicks and those views to watch their channel. Everybody loves trying to feed off of the fear of others. So do your homework, which you can do right here on my website, and you can see the facts as they are completely laid out here in our market here in DFW. And of course, you can always tune in here too to my channel. I promise if I see some concerns in the data, I'm going to make sure to let you know. Now, the closed sales have been lighter over the past 3 years as well, but those are starting to level out as well. Now, let's dive into the monthly stats, and you can follow along too. Just go to whymovetodallas.com and scroll down the page. All of these metrics that I'm talking about are right there, and they do update monthly on my website. So again, teach a man or woman, of course, to fish and you feed them for life. And it's all right there for the taking. We dive into 9 of the most important Dallas housing market metrics, and it's straight from the MLS data right here in DFW. We already noted the median sales price earlier for October, and that is at $375,000. One note, though, that the lows of each year do keep rising, as you can see, meaning that the market has found footing at certain price points when buyers do step in to buy. And that price is rising as well. So waiting for homes to go back down to those 2020 levels has not actually been a very fruitful strategy. Now, the closed sales for October also had a strong showing compared to the last 2 years, as you can see. We had 8,681 closed sales for the month of October in 2024, and that was up from the 2023 number of 8,079 and over year 2022 as well, which was 8,566. So there's another sign that activity is starting to build in the market. So let's also look at a few of the metrics that are showing signs of some weakness. Inventory in the Dallas housing market is at multi-year highs, as you can see. Inventory in October is at 4.5 months, which is the highest level since 2022. While still not considered a buyer's market at 6 months or more, it is an indication that you have a lot more negotiating power than you have had in years. And to be completely honest, that has totally worked for multiple clients of mine over the past couple of months. And this metric will typically peak around October and November each year, so it should begin to start to move down a little bit. Now, the days on market also are near the highs and earlier than they typically are for the year. This is usually going to peak in the month of January. October's number of 39 days is closer to January's numbers for the previous year. So we'll kind of see if this continues to grow leading into January before dropping back down in the spring market. Then we'll have the percent of original price, and this metric is going to give you a glimpse into the buyer's ability to negotiate. This is at its lowest point in the past 2 Octobers, indicating that buyers have the highest ability to work a deal than they have had in years. And this again will typically bottom out in December or January. And as you can see though, this is already starting to level out a bit. Finally, just a quick glance at the transaction charts because people are always wanting to know how many homes are on the market and how busy And what are the opportunities that are out there? Homes for sale correlates to the months of inventory we already showed, and that just gives you the raw number. This is at multi-year highs. New listings are at its highest October reading for the last 4 years, meaning there are more options to choose from, while this is an indication of supply rising as well. We just are not seeing those prices drop. So these are not distressed sales hitting the market, as we will take a look at foreclosures as well. Finally, pending sales is also at its highest for the month of October in the past 2 years, meaning people are buying those homes coming on the market at a higher rate. So overall, yes, the inventory has increased to higher levels than it has in years, but people are beginning to buy more as well. People are starting to realize that they don't need to be so afraid of the real estate market. And if they're needing to move, they're ready to pull the trigger and actually get into a home instead of continuing to rent. So, to wrap things up, let's kind of dive into the macro or broader level indicators to see if there is anything to worry about on the horizon. Again, going to keep reminding you, I have all of these indicators on my website. We've worked really hard to get those out there for so many people that are asking. So again, just go to my website, whymovetodallas.com, and at the top there is a link to the economic indicators. On this page is where we discuss economic indicators that affect the housing market. Each has its own influence on it, but when you put them together, you can begin to see a much larger picture. First, our housing permits. This affects supply as well. This is for single family homes, new construction housing permits issued for a given month. Permits have been dropping since May 2024's high. So there isn't a flood of inventory from new homes coming anytime soon. Also, check out the housing shortage tracker for the DFW metro area. As of September 2024, DFW is short over 91,000 new housing permits. And that's just to keep up with all of the new jobs that have been created here in the DFW metro. The ideal number is one permit for every new job that is created, and DFW is at one for every 3 new jobs. So this, my friends, is a big reason that prices are not dropping. We have a big shortage here in DFW. All right, now this is going to lead us right into another huge metric, and that's DFW's unemployment. Now, the Fed indicates the unemployment rates in DFW are at 3.9%, which is very low. While it is not at its lowest point over the past few years, it does indicate there are plenty of jobs here in Dallas. This metric is one of those leading housing indicators, as it will forecast if homeowners could be in trouble of losing their jobs and possibly adding distressed sales to our housing inventory, which definitely could, of course, affect prices, as there would likely be less buyers since people are probably going to hold off buying until the economic promises look a little bit more favorable. All right, now the wages in DFW, though, are at an all-time high as well. As you can see, the average hourly earnings in DFW are now over $35 per hour. So the economy in DFW is certainly strong. No indicators are saying distressed sales are going to be flooding our market anytime soon. Now let's look at mortgages, though, that are more than 90 days late. Though this actually is not specific to just here in the Dallas-Fort Worth area, this could give us a warning indicator of a possible decline in our housing market, as foreclosures hitting the market would cause supply to rise. We see that again, this is at multi-year lows, and there is no indication that distressed sales are hitting the market anytime soon. So one of the main concerns with Trump's policy is that they will cause inflation to rise again, as people again begin to spend as the economy picks up steam. Of course, we'll have to keep an eye on that. This may cause the Fed to have second thoughts on lowering the Fed funds rate any lower, as inflation could begin to head back up. But as you can see in the chart, inflation has already been picking up steam, and Trump hasn't even taken office yet. Now, the last indicator is the 30-year mortgage rates. We all know that these do play a big role in housing affordability. I talked earlier about this and how these are correlated to the 10-year Treasury bonds, what affects prices, and more importantly, the yields for those. The markets are ripping right now, and this is causing the rates to stay inflated even though the Fed continues to lower the rates. It's kind of ironic, though. We would almost have to cheer for an economic slowdown or some serious geopolitical issues in order to cause investors to flock to the safety of the bonds, and thus lowering the yield, leading to mortgage rates declining. Now, with Trump's number one priority to ensure the economy is strong and creating jobs, markets are likely to continue to rise. Last time he was in office, it took a pandemic to stop the economy in its tracks in order to cause investors to flee to safer investments until the storm cleared. Of course, nobody wants that to happen again. So let's recap. I know I showed you a lot of information. I love to give you these charts and graphs and show you all of the data. We talked about some current events happening in the world and how they are affecting the housing market. We noted that even though the Fed is lowering rates, mortgage rates are not following suit. We talked about what would cause mortgage rates to drop and what influences them. We talked about the Dallas housing market and its cyclical nature. We also noted the typical 2 best times to buy homes here in Dallas. If you didn't remember, go back and take some notes. We also talked about the main housing market indicators in DFW and what those are telling us. And finally, we dove into the economic indicators that will affect the Dallas housing market. Now, you may have to watch this a few more times in order to kind of grasp everything that we talked about. Also, again, use our website. We have offered so much to you in terms of the Dallas housing market and how to keep tabs on what actually is going on. But if you do have any more questions, that's what I'm here for. Reach out to me at my information down below and make sure to hit that subscribe button down below so that you're notified when I drop new content all about moving here to Dallas, Texas. But most of all, if you are wondering if moving here to Dallas, Fort Worth is right for you and your family, I am here for you. I help people just like you every day relocate here to the Dallas-Fort Worth metro. And if you do want to learn more about living in Dallas, Texas, I put a link to a playlist dedicated to answering your questions all about relocating to Dallas, Texas. So make sure to check that out as well. And until next time, my friendly, happy people, take care.